Traders, let's get real for a second. How many times have you stayed at your charts, frustrated and overwhelmed, watching the market move while you are stuck on the sidelines, or worse, in the wrong direction? What if I told you that there is a hidden roadmap right there on your charts that can show you where exactly the market is going? It's not magic, it's not luck, it's the M's and W's. Yes, those simple looking market patterns are the key to spotting market reversals, identify the market trap set by the huge guys, and turning them into your simplest golden opportunities of trading. And today in this video, I'm going to show you how to use them like a pro. But first, let's talk results, because strategies mean nothing if there are no results. This is my most recent payout from the most reputable prop firm, FTMO. It's not just proof of the M's and W's, it's proof that with the right strategy, consistent, scalable success is possible. And here is the best part. This is not reserved for advanced traders or insiders. These patterns are everywhere, and by the end of this video, you will know exactly how to find them, trade them, and profit from them. In this video, I'll be giving you the full blueprint of trading M's and W's. One, how to spot M's and W's in any market class, Forex, crypto, stocks, indices, you name them. My exact entry strategy and exit strategy so that you can easily replicate it. And the number one mistake that is made by traders so that you won't repeat the same. Let me tell you something most traders do not admit. This game isn't about finding a magic indicator or catching every move. It's all about mastering simple, repeatable trading patterns that actually work. I've been in this business for years, trading for top pro firms, coaching other traders, and building my reputation on strategies that produce results. And today I am giving you one of my most powerful weapons, which is M's and W's. If you are watching this, it's because you are ready to stop losing and start winning. So here's the deal. Stay with me for the next few minutes, and I'll give you the tools you need to turn your charts into a money man. Don't click away, because this is not just another trading tips video. So let's dive in and change the way you trade. So by the end of this video, you're going to be knowing when and where to expect patterns like these ones. This is an M pattern on GBP odd, and you will know exactly where to expect them and how to identify them. This is another pattern on Euro JPY, which is a beautiful M pattern that was issued here, and another one on Euro CAD, which was also issued at this particular point. As you can see, this is not in history because it is actually the current price is moving right here. All right, so without wasting much of our time, let's jump right on how to identify these patterns with ease. So we are going to be using USD against South African Rand so that we understand how to locate these patterns. So the first thing is always to start on the H1 time frame. What do we need to see on the H1 time frame? We need to identify what we call a peak formation low, or basically a peak formation high. In our top 1% traders course, I actually teach how to identify these peaks with very easy steps, whereby you can simply do 3 steps for you to arrange and find what we call a peak formation low or peak formation high. If you want to be part of that top 1% traders course, use the link in the description box below, because we are not going to delve much more on how to identify peaks with ease in this particular video. So as I've said, the first step is to always identify peaks, which we call cycle initiation point. So in this particular case, we can see that this was actually a beginning of an impulse to the upside. You can see that the impulse was going to the upside, but before this was not available. It means that we had to know the characteristics or what we look for this particular point for us to get this or to anticipate this move to the upside, basically like that. So after identifying the peak formation low or peak formation high, the next thing is to at least see the first impulse from that peak formation low or peak formation high. If we say impulse from the peak formation low or peak formation high, it's basically a move away that low or high. So in this case, we had this impulse from that particular point right to this zone. There was an impulse. That is step 2. Step 1, peak formation low. Step 2, impulse from that peak formation low. After seeing an impulse from a validated peak formation low or peak formation high, we now need to switch to the M15 time frame, which is our time frame of observation, where we will get the M's and W's. All right, so after that, we will switch to the M15 time frame, and on that M15 time frame, we start to look for the pattern. The pattern is going to be seen on the M15 time frame, whereby we need to see the first leg and the second leg clearly demarcated from each other. So in this particular case, we can see this was the peak formation low that we obtained from the H1 time frame, and after that we had this impulse to the upside, and after that impulse to the upside, we can see that there was this clearly defined W pattern. This W pattern must be issued at the 200 EMA, which is the one in white. So for the purposes of those who do not know, my 5 is in yellow, 5 EMA is in yellow, my red EMA is the 13 EMA, then my white EMA is the 200 EMA, and my 800 EMA is the one in dark blue. So the pattern must occur at two possible points, either the 200 EMA or the 800 EMA. If that happens, it means the pattern is valid. So in that particular instance, we are now saying we had this W pattern on the 200 EMA before the market started to continue going to the upside. However, this pattern to be valid, it should have several things which we need to discuss right now. So the first thing is the pattern should come after a valid peak. That is one. The pattern should come after we have the first impulse to the upside, which is 2. Then the pattern must have two distinct legs divided by a 513 EMA cross for the first leg and another 513 EMA cross for the second leg. We can see there is yellow EMA crossing red EMA for the first leg, and then yellow EMA crossing red EMA for the second leg. Basically like that, it means the pattern was actually valid. The other thing to validate the pattern is we need to see the trader's dynamic index, which you can get for free. Just download it in the free Telegram channel that I'll leave in the description box below. You can get this indicator that will help you to validate these M's and W's with clarity. So we can see that we had the first leg, and then after that first leg, it was right below on the trader's dynamic index, and the second leg was right above within the trader's dynamic index. It is to signify that there is a rise of the relative strength of the currents in their pairing. So after that, we have EMA crossovers, and we have the TDI confirmation. The next thing is, where do we make our entry? Our entry is made at a candle closure above the 13 EMA on the M15 time frame. We can see this is where we were going to make our entry, and then our stop loss will be right below structure, basically at this particular point. So it's entry at above candle closure above the 13 EMA, and then stop loss right below the structure, and take profit at twice the risk that we have exposed ourselves to. So to summarize the steps that I've actually laid out, 1, we need to see a valid peak formation low or peak formation high. For peak formation high, it will be an M pattern. For peak formation low, it will be a W pattern. After that, we need to see first impulse away from that peak formation low or peak formation high. And then the next thing is now for us to see the M or W and validate it using the EMAs that I've shown you, as well as the trader's dynamic index. After that, if you follow all those guidelines, you'd find out that your entries will be much more accurate and you won't lose unnecessarily. With that, you'd find out that there are some things that I haven't discussed within this particular video, which is identifying or pinpointing the cycle initiation point, which I talk more in the traders 1% traders course. You can be part of that course and learn more on this particular concept and understand and master and probably pass your profits. On that note, we've come to the end of today's video. Thank you for watching. Like and subscribe, and I'll see you in the next one.